Welcome back to the channel. In today's video, we're going to be talking about how to manage your risk, setting stop losses, break-even points, how to choose your profit targets. This is one of the biggest things that I see traders make, especially if you're a beginner trader. You just don't know where your stop loss should be. You don't know when you should move your stop loss to break even, or you don't know where to be taking profits. And be because you're being too greedy, or there might be the opposite, which is you're being too careful, taking profits too early, messing up your risk to reward. So this video I'm actually gonna give you some live examples of trades that I personally took yesterday and the day prior, and of course they were alerted in a private group where I trade live every single day. So if you want to join our group, link will be down below. Make sure you use code 39 at checkout, just the number 39 at checkout for to try out the Discord, our private group. Learn every single day with us for only $39 a month. I promise you, that's a steal in my book. So let's go over a trade that I took yesterday. It's a trade that actually was very nice, about 20 plus points with pretty good risk rewards, about a 1 to 4 risk reward. So I had this level right here, this 56.92 area on ES. If we actually jump to the 50-minute, you can see why I actually had that level. And this 56.92, as you guys here, was this pretty much this resistance area turned back into support. We also had a previous fair value gap. They got broken above and now held as support. So I waited for that level to get hit. Price came down, it hit it, and then I got in around 56.93.50. My stop loss was under the previous day close, which would have been right under this 56.88 area right here. So my stop loss was roughly about 6 points, roughly something like that, 5 points, with a main target of one taking out the equal highs that we had on the 5 minutes, as well as the all-time high, which I never getting stopped out before, but it did actually hit it. So roughly we had a 20-point reward with about a 5-point stop loss. Now we entered on the very first candle, so this 5-minute candle right here, and a lot of people ended up getting stopped out. A lot of people ended up getting stopped out in this trade, and it's quite unfortunate that you guys a lot of people get so scared of the trade. So a lot of people entered with me here. We took a little TP here on this pop because there was a 5-minute fair value gap as well as the previous lows. Again, now let's quickly talk about profit targets. Profit targets should always be when your trade ends up, when your trade can potentially reverse. So a major resistance point should always be your profit targets. Exactly why one of my profit targets was these equal highs, because maybe the liquidity got taken out and then we get a move down. In this case, we kind of did. Look at this. We took out liquidity, came down a little bit, but luckily, kept going higher. So it's where profit targets should be always. Ask yourself, if you are, let's say you're going long, ask yourself, if I was a bear, if I wanted to go short, where would I want to go short? And the point where you tell yourself, hey, I should be going short here, potentially if I was on the opposite side of the trade, more than likely should be your take profits area. Your take profit should not be a set amount, should not be a set dollar amount, it should be following the charts. So then you look at it and you're like, okay, if these are potentially take profits, my stop loss will be here. Does the risk reward make sense? And if the answer is yes, hey, it does make sense, then you take that trade. Now, let's say you said take profits, and the main issue all traders have is as soon as their trade is a few ticks into the profit, what do? They bring up their stop loss, boom, right here. So let's say you entered here, a little bit of chop, this is where you had all the buyers come in, they push it up, maybe you take a little profit here or whatever it might be. Then you move, okay, I'm a few 5 points in the profit right here. Let me move on my stop loss to break even. Then it comes down, price hits break even, and then it keeps going your way. And the mistake that you're making wrong here is ask yourself, from this point to this point, what has changed into the chart that buyers should be stepping in? You should ask yourself, always this, where should buyers be stepping in? In this case, this is the area to defend, right? This blue area right here, this 63.90, this 56.90 to 56.92, this 2-point area was the marked out area where you had this previous resistance support as well as the fair value gap, and then the very last area of support will be the previous day close, which was shortly right under. So you want buyers to step in here. So far, the chart has not done anything else that has moved up where the buyer should be stepping in. And that's why I told people. But people still, they're following their emotions, they're following just the dollars, they're not following the charts. They don't know when to move up their stop loss to break even. Now, the time you should move your stop loss to break even would be, or sorry, not to break even, it should be moved to the next area of where your trade gets invalidated. See how here we have on this 1028 candle, we have this big move up. This creates a fair value gap here. Now this fair value gap becomes the next area that the bullish side is going to be defending and price should not be falling under. So what you can do now is, okay, this is the current area from when you first started. The trade finally gives you another area that you can move it up. Now your stop loss becomes a candle close under that area. And I'm always a big fan of the candle closes. Right now, this is the area that buyers need to, if price retraces it, need to step in and buy up the price. As you guys can see, price goes into it, gets bought up, and boom, comes right back up. If you're going to use hard stop losses, give yourself an extra few points, because a lot of times price will tick a little bit under. See the fair value gap goes all the way to right here, so price kind of ticked right on a little half a point under it or whatnot. So you do gotta be careful if you're gonna be using hard stop loss. That will be a little bit more, give it a little bit more room. The price hits and then moves up, right? And you can use the 1 minute. You can also use the 5 minute, depending on the trade you're looking. In this case, it's more. You can use either, right? Once you get the next leg up, that shoots up. Look at this, goes all the way up to the liquidity where we had a big chunk of our take profit. Your next area now gets moved up again. Now your next area, if you look at this 5 minute, you should be able to look at it. It should be this 5 minute fair value gap. Now your area can be fair value gap, can be a Fibonacci, can be anything it is. In this case, it will be next area will be 5 minute fair value gap. And if we go to if you join on Discord, I'm telling you this whole time. As I'm trading, I'm telling you, hey, if we close under it now, I'm trailing my stop to right there. So you can see price. Now your stop will be right there, close under this 5 minute area. And as you can see, price gets protected yet again. And goes makes another push higher. You take some more profits. Then we took some more profits at 5, 7, 11. And then we had about 15% of our position left. And we're just trailing our stop. Now our next level becomes this. We have the 5 minute fair value gap and also the retest of the lows. Now once this candle right here closed under it, that's when we end up stopping out. But guess what we didn't do? We didn't get stopped out here. We got stopped out much higher. We're trailing our stop based on the chart. And we're trying to catch as much as the move as possible. Right? Because you might think in your head, it's like, hey, if I move my stop loss break even very early, it's safe. It might be safe for that trade, but over the long term, you're messing up your risk reward. You're literally destroying your risk reward if you get stopped out on this red candle over here. So every trade you're not catching your full TPs. Let's say this is your full TP, but you keep getting stopped out so early in your trade, you're literally destroying long term your risk reward. You have to let your trades do their thing. You have to give your trades some room to breathe. You have to be okay with taking some drawdown, taking some heat on your trades. You have to be okay with taking some losses on your trades, right? You can never be a perfect trader, and the price needs time to get over its area. For an example, if price had gotten invalidated, if your area is this, right, this whole area right here, this 2.2 to 4 point area right here, if price goes under here, then it gets invalidated, and then you stop out. But as long as you're holding, this is where you expect buyers to be here. That's where you should be keep taking profit, holding on to your trade. And the way I like to see the market is I like to see buyers and sellers fighting over certain areas. Where there should be buyers, I expect the market, I give them a chance for the buyers to step in. If I'm expecting buyers to be right here and sellers to be right here, I'm giving time for the price to just have a move out of it. Right, and then looking for the 1 minute times to jump. It's almost crazy to think that you can guess the exact tick of the price, right? So that's why I like to kind of go with a couple point areas I'm looking for. Because guessing exact tick is almost impossible on some of these larger indices. So this is how you need to manage risk. Now, if you enter a large position or a small position, if you look at the trade for hey, I'm going to be using 5 point stop here, then you can manage your trade, eyeball the trade on certain risk size. But for example, if we go to NQ, I took a trade the other day. Currently another trade here on the shorts are playing out. But if we go to NQ and I took a loss on a trade, it was a couple of days ago. I believe it was this right here or something like that. I believe it was on Monday. Yep. So on Monday, I took a loss. I believe it was on this trade right here. Could be wrong on the trade, but uh, it was roughly right here. I took a short off of this nine ran to this candle. As you can see, we had a 5 minute area there, and my stop was about the high of the day, which was about 32 points. And I was targeting, I believe it was the lows down to 2,500. Delete this. So this is what I was targeting. Right? I was targeting 100 points, stop loss 30 points. Now if I look at this and I tell myself, hey, usually I have a 15-point stop, this trade is going to be a 30-point stop. It's a little bit more risky. Then I'm going to size in accordingly. Or if maybe there's news coming up, or if there's maybe something in the charts you don't fully love, it's a non-A plus setups, then you risk less. I don't think you should be risking the same amount per trade because every trade is different. And you have better trades with better risk to reward and some other trades. And those that have a better opportunity and a better risk to reward, a better setup, should be taken with some heavier size. So that's personally how I like to manage risk. That's how I like to look for my stop losses. And that's how I like to choose when to move up my stop loss to that break-even point. Hope this video helped. And if it did, please like the button, subscribe down below. And as always, peace out.